How do you minimize your land tax? Okay, great question. Now, full disclaimer, I'm not a licensed chartered accountant or accountant or advisor or anything like that. Of course, I'm a buyer's agent or a property expert. So let's get into it. I know a bit about this, and I guess the way you can minimize it is a few ways. The more you invest in one state, the closer you're going to get to hitting the threshold, or maybe straight away you'll hit you're going to get hit for land tax bill, depending on the state or territory. So, for instance, WA, if the land value does not exceed over $300,000, the land value, not the asset value, the land value, then you're not going to pay any land tax. As soon as it hits over 300K, you're paying land tax. Queensland, 600K. Okay, this is for your individual name. Now in Queensland, I know if you purchase under a company or a trust, it's 300K. Once you hit over 300K of the land value, then you're going to get hit with a land tax bill. Victoria, straight away, as soon as you purchase the property, you're going to be hit with a land tax bill. But in saying that, depending on where it is as well, if there's certain rural areas or regional areas, there is different laws as well. So every state and territory has different land tax, concessions. Now, how do you get around it? Pretty much, it's pretty simple. Don't buy your properties in one state. What does that? Don't buy all your properties under this, under your own individual name or the same entity. Always, you have to really diversify. So, for instance, I know I've got a few clients. One client, I think, got 8 or 9 properties in Victoria. Got another client, he's got 5 properties in New South Wales or Sydney, and the land tax they're paying is pretty high. So, how do you get around this? Just investing in different entities and in different states as well. So, for instance, I've got a few in my name. I've got a few in as well in a trust. So, the land tax is not too heavy on me. Not just that as well. If you do own apartments or townhouses or units, the land tax on those, those dwellings is a lot less compared to a freestanding house, or the bigger the land, or the bigger the, if it's a commercial property as well. Okay, so the bigger the land value, the more the land is worth, of course, the more you're going to be paying in land tax as well. So that's very important to keep in mind, So that's why if you've got, properties, and you've got properties in capital cities, your Melbourne and Sydney's especially, and the property is worth $2-3 million, the land value will probably be worth a fair bit. Once again, Victoria has the highest land tax, so you're going to get hit very hard and pay a lot in land tax. There's no way around it. I know if you have a property in a trust or a company, okay, and you purchase in New South Wales, the land tax is going to be higher than what it would be in your individual name. So check with your accountant with that. I'm not sure if the laws have changed that, but last time I recall it, they were the laws. So that's how you get around it. You might buy a few properties in your individual name. You might go and buy other properties in a company or in a trust, and you might open up another trust and buy more properties under that trust, so you don't get hit harder for another land tax bill. But you just have to get the right advice from your accountant, because, of course, setting up entities is pretty costly. But on this side, of course, it can save you a lot of money. It can save you, hundreds of thousands of dollars over a life of owning properties. Of course, there is, bills involved when you open up a company or a trust. When it comes to doing your tax returns, it's a lot more expensive than doing it in your own individual name. But as well, if you're going to be saving, tens of thousands of dollars on land tax, it's something maybe you have to consider. So hopefully that helps. Hopefully that gives you a bit of clarity. Okay, it's about the location, it's about the state or the territory you're in. They've got different land tax concessions. Of course, it's what entity you're purchasing the property in or putting it under. And then, of course, the last one is what type of dwelling is it? Okay, so remember, of course, I don't want people to go out there and start buying apartments or units or townhouses because they think they're a great investment and you're going to pay less land tax. They're probably not going to be the best investment. Okay, so keep that in mind. Don't just make a choice of investing in a different dwelling because you're going to be saving on land tax. It's a completely wrong way to look at it. So, but of course, the land value is what appreciates, and of course is what you're going to pay a lot of land tax on. So hopefully that helps. Hopefully that gives you a clarity. Once again, we'll see you next week's poll. For next week's poll, if you do have any questions, please don't hesitate to reach out.